Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another amazing episode of We Build Great Apartment Communities, the place where we focus on taking average apartments and converting them into amazing communities with the ultimate purpose of improving how people live. And of course, we use real estate as a tool to doing that. So today I have another great guest on the show, somebody who is, I think, going to add really a lot of value from a couple different viewpoints, from the viewpoint of an operator and then also a passive investor, someone who is where things are happening quite a bit right now on the East Coast. So I'm very excited to get his perspective. And that's Pancham Gupta. Welcome to the show, buddy.
Thank you, John, for having me.
You're very welcome. So, hey, I'm very excited to really speak with you. So Pancham is the host of the Gold Collar Investor podcast. And we'll talk a little bit more about that. He's a full-time real estate syndicator and principal of Mesos Capital. He also has a master's in information networking and computer science from Carnegie Mellon University, manages and controls roughly around $43 million in real estate. And he's bought and invested in properties in 5 different states and also internationally. Pancham is great at finding value propositions, and he's successfully built portfolios which are cash flowing in a double-digit return. So we're going to talk more about that as well. And he's co-founder of the Multifamily Mastermind in New York City. A lot to talk about, Pancham, and I'm also very excited to talk to you about, how your information technology background, how you've been able to leverage that, to scale and also systematize your business for growth. So, hey, welcome to the show, and excited to start this conversation.
Yeah, absolutely excited to add value to the listeners for your show.
Okay, so let's talk a little bit about your information systems background. Okay, share with us your story and also your background in information systems.
Absolutely. So, quick background on me. I actually came to the US in 2003 to get my master's degree in computer science and information networking. I grew up in India, and my plan was that I'll get my master's degree and get some work experience. Then I'll move back home to start something of my own. And, it was 2009. I actually sold everything here, me and my wife, all the furniture, ready to move back, almost ready to book the flights. And then we found out that we were expecting our first kid. And we were like, you know what? Okay, let's delay the plan. It's hard to move houses, forget countries when you're expecting. So let's delay the plan. And, as the fate would have it, we are here for good. And in 2011, we planned that, we're not going to move back. And at that point, I started reading about investing. As many of us who actually start in investing world, it is there are so many options that we have for investing in the Wall Street, and we always get confused. I was always looking for more investing opportunities, and I started reading many books, and I came across Rich Dad Poor Dad, and that's really changed the whole game for me and the cash flow quadrant. So that was like the beginning of investing journey for me. And then from there, I invested into 5 different states, grew my portfolio, and since then I've sold most of it and gotten into multifamily syndication. So that's a quick background. And now going back to your question of information networking and how that has helped me scale the business. The answer to that question is that I'm an engineer from my background, and we are very meticulous when it comes to numbers and processes. It has helped us with is that creating systems around different things. Like, for example, investor management. When we started, we did not have any systems, and we're still improving on them. We take one piece of the business, let's say investor management. We were doing all of that ourselves. And since then, we have scaled it up. We created systems, created software, bought some external software, and created in-house, investor management processes so that we can have a conversation effectively with the investors. So to give you an idea, before, on average, we were spending an hour per investor. That has gone down to let's say 15 minutes. So we've saved that much time by putting in processes. So that's one side of the business. And the other side is actually finding deals. And that is, as you know, as anyone who's been in the market knows, that it's very, very hard to find deals.
Pancham, I'm gonna ask you a couple of questions, okay?
Yeah.
Because I really love how you're kind of thinking through this conversation. Give us an example of the investor management systems that you have implemented, right? And then here's how we're going to break this down, okay? Because with your systems background, it's going to be very interesting to see, and I think talk through the various systems and how you think through systems throughout the real estate cycle, right, of investing. So that would be acquisitions, financing, management, and at some point we have to dispose of the assets. So we'll talk through that cycle from the viewpoint of systems, which is something that I can already tell that you absolutely love. Can you give an example of the investor management system that you're using today?
So just want to clarify one thing though, that, I do have computer science background. It's different from systems, but it definitely helps, it's on the same lines.
Right.
So in the investor management side, like on that side, what we did before, we were, answering a lot of questions ourselves, right? Like, when the investors had questions, and we still do that. But what we realized, that people want K1s, like, which is the tax document, and some of the return numbers, or they didn't receive the check that they were supposed to receive in the mail, got lost in the mail, or whatever, things like that. So we bought a third party software which actually does entire investor management, where they get their individual logins. Everything related to their investment is online, or if they've invested with us in multiple deals, they can see all those deals, just like you will see your 401k, right? You log into your account. So we created that, and now that has created a lot of ease on our side, because we have this tool, this central place where we can connect with them. This actually also helped us when we buy a new building, right? And let's say we have 60 investors in that building. Before, it was a very tedious process, for example, to take out all the information from the subscription agreements, and then putting them in the bank account, and creating ACHs for them, all that. So we have created a system around that, and it's easier with this tool to get all that information in one place and be able to just quickly do this. And
so are you making distributions out of the system, or is it just a login area for investors to be able to review their files and, I guess, to some degree, performance, right?
Yes. So we actually want to get to that place, and we've requested that, and our current software package does not have it. But we want to get to a stage where everything from their funding, if they want to send the money, they can do it through the system. And if you want to send them the money, which is distribution, we can do it through the system.
What system did you ultimately go with?
So we went with something called IDR, which is Investor Deal Room. That doesn't do some of the things that we want, but we have looked into many, many different systems like Groundbreaker, IMS, Juniper. There are many of them if you really look in the marketplace, and they all have different price points. We went with IDR, and yeah, there's more to be desired there. But we are happy with what we have so far.
What do you wish this system could do differently that it doesn't do now?
So exactly what you asked. Currently we do not have the capability. So let's say we send out a deal, and it's ready for raise. We want people to accept, if they want to invest, they should be able to go in and fund it from that directly. Okay, so our bank account would be linked to that system, and they can just, basically, we don't have to do anything. They will just log in. They will connect their bank account, and they will say send 50,000 and press a button and done.
Right. I can see why most third-party platforms are struggling with that, because of the risk associated with sending out a wire or an ACH, right? To them, there's a lot of exposure.
Yeah, so there are systems which can do that, but they come at higher price point.
Of course. I really appreciate you sharing that. I think that's a really important component inside of the space, especially if you want to grow with, your investors, or grow your equity base, as we say inside of our environment or inside of our company. So let's continue on with your conversation around the acquisitions, right? How you've systematized acquisitions and just the thought process that you've used to do that.
Yeah, that part, see, before acquisition, we have to find a deal, right? And that is where we struggle the most. And we have created some systems around that. And we're still trying to improve that, which is, we have 6 markets where we invest in. And in those markets, as you know, in most markets, the top 5 to 10 brokers control majority of the market, right? And what we try to do is that we are trying to build relationships with those brokers on ongoing basis and keep the relationship alive. And in order to create a process around it, what we do is we have a goal for each one of us, and our assistants actually help us with this stuff, to talk to 5 to 10 brokers every week, regardless of whether they have the deal, whether they do not have the deal, just to keep everything fresh, right? And there are a lot of brokers, right? And we have 6 markets, and if you really, it's over 100. So by the time you come back to the same broker, it probably 2-3 months have gone by. So we've done that, and that has tremendously helped us. I believe that's one thing that is helping. It takes a lot of time, but hey, this is something that we want to do. And so that's one side of acquisition, right? We're finding the deal. The next step of that is, once we have a deal, we want to get it under contract and start raising capital for it. So for that also, we have processes where, once we want to go into due diligence, now we have a certain kind of relationships. They know exactly what we expect, and we know exactly how they work. Right. So that process is now much more efficient. We recently closed 132 unit building, like literally 30-40 days ago. And for that, exactly the same thing. That process was very smooth for us when we went through this DD process. And then the third part of the acquisition is raising, letting investors know that we have a deal, and doing the capital raise, getting soft commitments and all that. That part, we haven't really spent a lot of time on systematizing that. And we do spend a lot of time on that part once we have a deal under contract. So that is something that we are going to spend more time coming in the coming months as we open up a new fund that we're thinking about.
Okay, awesome. So I'm going to dissect some of what you talked about, okay? Just so that we put our audience in a position where they can put their hands around some of this stuff. So the first thing that you spoke of that you have improved systems around has been broker communication, which is really important, right? No matter if it's a broker or our partners for that matter, communication very, very important. What mediums are you using to do that? Is it phone? Is it a combination of email? Is it text message? Because there are a lot of ways to create engagement, to put yourself out there and do it in a way where it's very time efficient, right? There's nothing that beats a phone conversation, of course, or an in-person meeting, but of course, we're no longer in an environment today of in-person meeting anymore. So can you talk a little bit about the different mediums that you use to create that engagement with your prospective brokers or your relationships?
Yeah, sure. So the short answer, all of the above, but the detailed answer is that we actually prefer to have it via phone. That is it, and it has to be on our calendar and their calendar. It has to be specific invite. Otherwise, that meeting doesn't exist. So that's one, like step one. And then once we have for the very first time met or e-met, like for example, have a phone conversation. After that, we start our email communication and also text messages in some cases.
When you say, I heard you say, if the meeting doesn't exist unless there's a little white meeting, right? Like there's a color-coded white meeting. Does that mean your staff, or is that an actual meeting that's been scheduled with a broker?
No, so I don't schedule any of these meetings. It's my staff who does that. What I'm trying to say is that in my definition, that meeting does not exist unless it's on my calendar and broker's calendar.
Gotcha. I'm going to shift right now. So the summary behind that is you're using different mediums to create engagement with your brokers so that you stay top of mind, right? I'm sure some of that is email, some of that is text, but ultimately there's nothing that works as well as a phone conversation, okay? Because, you get to actually dialogue with a human being, right? We're likely never going to be able to move away from entirely, but people always try. So I'm going to talk about one of my favorite subjects. I think there's a lot of value that gets created inside of the due diligence process. Okay, I think more than we like to give our investments credit for. It sounds to me like you have a couple of third parties that you've worked with now over the years, that where they know your process. Maybe let's start off talking about the third party reports that you use to help conduct due diligence. Okay, so one of them, I'm sure, especially for 100 unit plus property, likely a lease audit, right? So can you kind of walk us through the various third-party reports that you order for the purpose of due diligence?
Absolutely. So we do have a checklist of items here. So I'll talk about the major pieces. So you already mentioned lease audit. What our team would do, they will go in the leasing office on the day of the unit walks, and there will be two people or three people depending on number of units. So our last deal, which was 132, we had three people going through every single lease and making sure they tie up with the rent roll, making sure if there is a pet fee that's marked properly, making sure if there is any other ancillary fees, it's already marked on the rent roll. If not, they will break it down. So that's the lease audit part. Then the second thing is that we will do all the unit walks, right? And we will get certified plumber on site, which will do camera all the sewer lines, look at the supply lines, and then we'll get a certified roofer, like a contractor who can go on the roofs and look at every single roof. Then we will have an electrician come in and look at every single building separately for copper versus aluminum and the wires, if to make sure that they're all good. So we talked about plumber. We talked about so plumber also looks at the storm drain water lines, which is become very critical in certain areas where there is a lot of rain. Yeah, so those are the main high level items, and our team, which is doing the unit walks, and we are also part of that. We will look at all the HVACs. Every single HVAC unit will be marked, and we will see whether what's the age of that, and we'll try to get age of appliances. We have actually moved away from this particular piece, but before we were getting age of every single appliance in every single unit. So how old is the refrigerator? How old is the gas range or dishwasher and all that? So we've moved away from that over the years, just because we felt that it was an overkill, and we budget certain item unless we are visually looking at it and it's in a bad condition, we'll just mark it, but we won't like create a date of manufacture or for every single appliance.
Sure.
Mainly
Okay, good. So due diligence is really, really important, right? So one of the things that I didn't hear you talk about in there was CapEx, right? So how are you, when you're going out and you're doing so you have your financial due diligence, then of course you have your physical due diligence, which you talk about several components, right? So, HVAC, especially in the Southwest, extremely important. We break it down by ground up. So for us, it's foundation plumbing, electrical, HVAC, right? Then we hit the roof, and then there's some other components there. But then CapEx, we look at a little bit differently. So how do you do your CapEx analysis? Are you using a property condition report to do that, which is a little bit more in depth, or what is your?
No, so what we do is, you mentioned foundation. So we also get structural engineers in some cases if we need to get foundation checked for certain things. But we definitely go in below, like in the crawl spaces, to make sure they're nice and dry. So going back to your CapEx question, we have our business plan that we want to achieve on that property. For example,
Right.
if you want to build a dog park, right, that would not come out of the DD. That's something, the vision that we have for the property. So those items which are not there and we want to do, we will have the list of those things. And then there are items which are already there and we want to improve. For example, we want to fix the units or upgrade the units, right? So
Right.
that part we will estimate after our unit walks and all the report. When we get a detailed unit walk report with every single unit, and see which things which are good, bad, and like good, average, and bad, we would basically, based on that, see how many units need what, and then come up with the capex budget for the units. And then on the outside, we would have the things that we want to do, and based on that, we will come up with the budget for that. For example, going back to that example, if you want to build a playground or a dog park, we will get the estimates for those and put that in our budget.
Sure. Okay, good. I think that the way that we walked everybody through that, I think was really, really clear and gives everyone some context. So now I'm going to shift to the last topic that we're going to talk about in this cycle, right? In the investing cycle when we're buying in making an investment, especially in an apartment building, is management. Okay, so you talked a little bit about asset management, so we're not going to touch on that too much. And you used, I think it was IDR, which was the investor system, okay, communicating to investors. So let's talk a little bit about property management, right? Property management is huge because we can buy right? We can buy the asset right. We can have a great plan, but ultimately, if we don't execute on that plan with great management or a good team or the ability to lead teams for that matter, the plan is fairly useless, right? So can you talk a little bit about your experiences in property management and some of your key learning lessons there?
That is the major make or break property management, like you said, right? And we have had our fair share of bad property managers where we had to let go some of them. And our process around asset management, which is managing the manager, which is the property manager in this case, right? So what we have done is we have a certain, before we acquire the property, we will come up with a budget, right? For the property. Okay, here are the expenses that we are budgeting, and here are the revenue items that we are budgeting that we think we will get. And then we are basically going to monitor our property management on monthly, on we have actually weekly calls. Initially we have even 2 times a week calls on going over everything that's going on the property. And in the first 3 months, once everything settles down, we kind of go to one time a week. But in those calls, what we really go over is that whatever is happening on the property, that's one. And second, we go over the numbers, weekly numbers. So what we do is before each and every call, we get our weekly call report from the manager and with the key numbers that we are going to discuss. For example, in the COVID situation, the collection numbers have been really, really important, for example, or how many people are not paying and what's happening with the tenants. So in the last couple of months, we have discussed things like this, that, okay, unit number ABC, this is the issue, so going over things like that, and then brainstorming together, okay, what we can do. And then we have also had issues like lessons like you were asking, where the expenses are totally out of control, where the property management company is spending, let's say, $3,000 on a unit where it should be only $1,500. And then those are some tough conversations and we need to have, and we have had those conversations many times, and we have also had fired property managers because of that. But that's some on the like expense side. You have to really, really watch out and control your property management company to make sure that what they are spending is something that you want them to spend. And that is the key, and the amount as well. Like, it's costing as much as you think it would cost, not going overboard.
Let's kind of expand upon that, okay? Because that's a very important, I think, component of management is establishing spending limits, being clear on actually what to spend money around, okay? So the first part of that is budgeting, right? And you talked about this a little bit. So getting the manager to buy into the budget. Now, how do you folks do that? Can you maybe really briefly walk us through your budgeting process and getting buy-in from the management company?
Yeah. So our budgeting process, there are two things to this, right? What we expect that this property should run at, and what property management company expects, right? So when we create our own pro forma, this is before buying the property, and we have certain things in the expense items. And then we will ask our property management company, who would come to us during the due diligence phase, and they will look at the units and all that. Then we will ask them to create a budget for the property. So that's where we will see what they have given us and what we have, and try to see where we are off, and then discuss all those items. We'll go over every single line item anyway. They're not like many line items anyway, right, in the revenue and expense. So we will go over every single item and make sure that they and us are on the same page. So let's say, for example, just in this conversation is very fresh in my mind because we recently acquired. There was an item on advertisement. Their number was much higher than what we expected because the property was 100% full. So we had that conversation, and their idea was to market on many different platforms because we wanted to increase the rents. And we said, no, we don't want to do that. So that's what we will do at the time of buying. And then on a monthly, weekly basis, you have to monitor that and really make sure. And this can get out of hand very, very quickly if you don't pay attention. So what we are trying to do there is we are setting up processes where we have what we expect and what we are getting. And then our bookkeeping company will make sure if there are any alarms, they will basically raise alarms if those things are not matching.
One of the things that you talked about there, probably the most important thing, is setting up variances, right?
Yeah,
In understanding when to
exactly.
leverage a
Variances.
variance to actually inspect further. And
Mm-hmm.
so that's a huge thing. It's something that we have learned to do, with our investments over the years. Is when we set up a budget, one of the big things that we discuss is the variance associated with that budget, right? Actual to variance. Depending on the line item, of course, it would either require more attention or in some cases not as much attention, right? So I really appreciate you bringing that up because I think that's something that it may not be discussed enough. In order to manage an asset, you actually have to be able to narrow in on what to manage, right? A budget is a great way to start, but also being clear on when to step in with a variance, I think is hugely important, especially around repairs. Because to your point,
Absolutely.
repairs can get out of hand. Also, labor is another one. I think payroll can get out of hand if you're not really intentional and clear about just the labor costs, right? Your labor expense rather. And so variances have been a really good way for us to help control those items, right? Because it sets up a flag. Are there any other things that you have focused on inside of the budget with variances to help manage down or manage up a little better?
So one thing that I didn't mention on variances is that so we have our own team which kind of figures that out, but we also have our property management team, which they will send us every month their actual numbers and their budgeted numbers and the variance column, and in red comments on each and every item why it went over or under both.
Okay, so here's a great question. Who's creating that information? Is it the property manager or is it your team, the accounting side on your team? Who's doing that?
So both independently. If you want to go real deep, let me tell you exactly what we're doing, right? So
let's do it.
We have, let's pick one item, R&M. And under R&M, there are so many things. Let's say carpet, right? And fixtures, right? And within fixtures, let's say, faucets and something, right? And we get, let's say, $3,000 this R&M item, right? Our guy will do is that go into each and every item, make sure, get all the receipts, all the unit numbers, match it up with the numbers that they have given. So they have to add up. If they don't add up, that's a red flag, and we need to, then he goes back and asks for that information. So that's more like just getting the information right. And then the property management they will send us variance report at the end of the month, and they will write the comments on exactly which is the regional, not the actual property manager, but the regional of that property will send us the variance report on what happened on the property. So now once we have both of those things, the variance, they call it MOR. But yeah, so the variance report and our own report, we will try to match it up and see if there are red flags that we need to discuss. And on our side, okay, let's say the variance is good, but we will also look at every single, like how many faucets were replaced, like in what unit. That is also important because they can keep replacing the faucet in the same unit.
So let me summarize what you just talked about. Okay, what you just talked about was reconciling your data, your accounting information.
Yeah.
So you're reconciling, in most cases, the purchase order, right, or the work order, in our case, property management. You're reconciling the work order to the invoice, or if it's materials, then to the receipt for supplies, right?
Mm-hmm.
And then you're also taking a look at a list of the units that have received the work to make sure that those units aren't being the lucky contestants of repeat purchases. Ask me how I know this stuff.
No, it is actually, I'll tell you, this is something that you may think will never happen. Yeah, obviously you need to trust, but you need to verify.
Yeah, you need to verify. Yeah, which is one of the reasons why we created our own property management company, and it works. It's been Much, much better. Not that there aren't some great managers out there. I think the issue for us was just the standard, right? Managing to our standards. And that's ultimately what my big takeaway was. I think as operators, we can just control the messaging better to maintain the standard, right? And standard, I've learned over the years, is about leadership and communication. And so, yeah, those are some really big takeaways for me. But I liked how you talked about reconciling data and using your internal staff to reconcile the data to then verify against the reports for the management company. So I like that. I think that's a really big takeaway for anyone listening is, making sure that you're reconciling against third-party information, right? Most companies do that. I mean, larger companies, and in the form of what's called an audit. This is may not be a full-blown audit, right, where you're getting an opinion from a CPA, but you can still nonetheless do that with your own internal process. So, man, I really like that. Well, we're at the end of the show, and I got to tell you, this has been a fascinating conversation to me. I always love details, right? Because details matter. Details are where we find profits, okay? And I think sometimes the details get overlooked. One of our great sayings is details, they matter, not only inside of our business, but in our life. So, Pancham, I want to thank you for participating. You've been a tremendous guest. I think the information that you shared is not only valuable, but also a lot of that information is immediately implementable, right? In other words, if I leave today, there's information that you share that I can immediately go and implement today. One of them being is the reconciliation process, right? If I was someone listening out there, an operator running into accounting issues or budgets not matching up, right? Or always getting a negative variance, that would be one of the very first things that I would start spending money on, literally tomorrow, trying to solve that problem. My guess is that would improve very, very quickly. So thank you again for being on. Before we end the show, I want to make sure we give our audience a chance to get a hold of you. But do you have any final questions for me that you think can add value to our audience? And then we're going to share how our audience can get in touch with you.
No, I think it's been great. And I can tell you that all these lessons we have learned over the years based on our experience. And this can save a lot of heartburn if you do that, reconciling and all that stuff that you were talking about.
It will save a lot of heartburn. I agree. So, hey, what is the best way for people to get a hold of you if they want to learn a little bit more about what you do, who you are, and how you do it? What would be the method for doing that?
Sure, I'm on LinkedIn. They can reach out to me on my email, which is p@thegoldcollarinvestor.com. And I also have a report that I wrote for top 6 reasons to diversify outside of Wall Street investments. And if they want to get hold of that, they can go to thegoldcollarinvestor.com/download. We talk about the reasons and also what are the alternatives, which is my thing is more personal finance. It's not just real estate. We talk about many, many other things. So they are all in the report.
Okay, awesome. So, hey, I'm going to summarize this really quickly for our audience. One of the big things that we really covered today was about systems, right? And I think you did a tremendous job of talking through systems using the sales cycle of a multifamily investment, in this case, an apartment building. We talked through roughly, I think it was a 125 unit apartment building, but we started with acquisitions. And one of the big takeaways there was how important it is to maintain communication with brokers. And we used various different mediums to do that, right? Email, text. But the big one where the most value is always created is that personal touch with the phone, right? Then from there, we transitioned into a little bit of the financing piece / investor relations. And one of the big takeaways there was this product that you called IDR. Now, even though it can't do distributions, it's still a great way to be able to provide consistent communication with login information, just so that investor clients, they have independent access to reports, especially K1s, without having to constantly reach out and say, hey, I'm having problems logging in, right? Or where is this information? You sent it to me 4 weeks ago, and I've been traveling on vacation because I just bought an RV and I can't find it. That's happened to me, by the way. Okay.
Yeah,
And then
that happened.
Yeah. Lastly, we concluded with management, and a lot of great takeaways there. But I think one of the big takeaways there was the importance of reconciling your data against third party. and really diving into those variances. So this has been a tremendous show. Thank you so much, Pancham Gupta, for joining. And I am your host, John Brackett with Fidelity Business Partners. This is the podcast where you learn how to take average apartment communities and turn them into, or average apartments rather, and turn them into great communities for the purposes of improving how people live. I am your host, John Brackett. You can check us out on our various mediums, which is iTunes. You can find us there. We build great apartment communities there. You can also find us on Spotify. You can link in with me on LinkedIn. My name is John Brackett. Also on Instagram, we have a We Build Great Apartment Communities page there. And then lastly, our YouTube channel, We Build Great Apartment Communities through our YouTube channel. So, hey, look, we're covering all the mediums to be able to provide you with some amazing content so that you too can get out there and improve how people live. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.